You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we were back. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Time for a little bit of TWIFO This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been enjoying yourselves this week. Hope you're having a good trading week out there. A lot to unpack, a lot to get to on the show today. Of course, if you want to get to even more options content in your life, only one place to go, theoptionsinsider.com/pro. So when you're ready to graduate to that next step beyond just the regular network, the pro is there waiting for you. Great pro Q&As, options oddities, after vol views every week, giveaways, early access to a lot of great content, and of course, some live streams baked in there as well. All there for you. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, I'm pleased to be joined once again by our old pal, Miss Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to TWIFO.
Thanks, Mark. Plenty of things to talk about. Should be a good one. A
little birdie whispered in my ear before the show that you've been going on some adventures, including to the magical place known as Buc-ee's. Is that correct?
I did stop by Buc-ee's. Magic is a good word for it. That place is wild.
I have never been there. I've heard great things. Everyone's telling me I have to go. So one of these days, I need to make a pilgrimage, apparently to a rest stop. Is that the case?
That's exactly right. It's worth the trip, even if you're traveling from Chicago. I promise it's worth the trip.
They need to have one near Chicago. I think the closest one is like 5 hours away, but I don't know. Maybe my next vacation, straight to a rest stop. I think that's the plan, listeners. There we go. Yeah, people worship that place. They wear the clothes. I've seen people dress up in the outfit because they have a mascot. It's a whole thing, this Buc-ee's. So if you're not familiar, listeners,
it's a big deal.
Check it out. Check it out over there as we check out what's going on in the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, let's get into a little bit of the old movers and shakers. No Beaver Nuggets, I don't think, on the movers and shakers this week, but we could see what we'll find out here. And, coming into the show this week, we have had a pretty much protracted upside run for the better part of the last few weeks out there. Certainly a lot of the major markets. So not surprising, even though we're selling off today, that we still are net green here for most of the products here on the week. I'm looking at the chart right now, and it's, I would say, about 60-40, 65-35 green over red this week. But Carley, you've been around this road once or twice. You've even had some Beaver Nuggets since the last I saw you. So I think you're ready and raring to go. I think you feel like diving into a little bit of moving and shaking for us this week, madam?
Sure, I think I can handle it.
All right, then you get to choose where you start, and you can just let the spirit take you from there, Carley.
Okay, so we'll start on the light side because I like to be, I'm an optimist at heart. I'm surprised to see some of the names on this list. So we'll start with number 5. We've got the Swiss franc up 2.28% on the week. New Zealand dollar is on the number 4, up about 2.5%. Number 3 on the list is silver, up 2.7%. And then we've got Bitcoin up about 5.6% roughly on the week. The one that's a real shocker to me, though, not necessarily a shocker that it's up, but just the magnitude of volatility we're seeing. The 3-month SOFR future is up 8% this week after being down 26.5-ish. I'm rounding a little percent last week. That is really incredible. That market's supposed to be boring. We're not supposed to be seeing that sort of thing going on there. Do you want me to proceed to the dark side?
By all means, you're running with it. Let's see how far you can
go. We're going with it. Okay. Dark side, we've got the Mexican peso down 4% on the week, heating oil down 4.5%, WTI down 4.65%, which is interesting to me. Maybe that's an opportunity here for the bulls. RBOB also on the list. So all the energy complex just getting shellacked this week. RBOB's down 4.75%. Last week it was down 8.6-ish%. So that's really had a rough time recently. And natural gas also on the list, down 6% after being up 12% last week. So we're getting a lot of volatility in natural gas, but that's par for the course.
Go figure. Carley's on the show. We've got nat gas on the list. What a surprise. I think you've been manipulating things behind the scenes just for your appearances here, Carley. All right, let's see what's popping off, listeners. On the vol front, remember, you can run these reports for yourselves. Just type CME and CVOL into your browser of choice. That's going to get you to that CVOL dashboard. From there, you set the high-low range for the week, and then go to the ordered list, and then that'll get you to what we're seeing here. It's going to order them by the daily vol change, but remember, we're looking at the net week out here. And unlike the last few weeks where we've seen things mostly moving in one direction from a vol perspective, either burying the needle to the downside or pinning the needle to the upside, this week we got a lot of upside, but it's kind of a bit of a mixed bag across the board. Let's start at the top. Carley was just talking about all the action out there in 3-month SOFR, so maybe not surprising that we're seeing the Treasury yield vol at the top of the list this week after giving up a lot of juice recently, getting some back today. A 134.91, up about 3.6 points just today. On the week, rampaging as well. The low was 122.08. So remember I said the vol came off pretty aggressively out there. Coming back this week, we are at the high for the week right now, nearly 135 out there. Below it, we have the energy CVOL, 48.57, up about 0.9 just today. And again, at the high end for the week, the low came 47.55 towards the beginning of the week. Below that, we have the commodities CVOL, 32.96, up about 0.4 of a point today. And on the week, pretty close to the upper end of its range, but not quite. The high came 33.12 just, I think, earlier today, actually. And the low was 32.57. Below that, we have the Treasury price vol. You know, Treasury's not usually the bastion for price volatility, but looking a little bit juicier right now. 7.25, up a little over 0.1 of a point just today. And also pinning the needle for the week. The low came at 666 last week, the number of the beast in the treasuries. Below that, we have metals. The metals vol out there, 1952, pretty much unched on the day, up about 0.1 of a point. The high, this is another one that's kind of in the middle of its range right now. The high was nearly 1996, I think, set earlier this week. and the low was 1929. So kind of hovering towards the middle of that range right now. Then below it, we have the FX CVOL at a 7.99, just a tick under 8. That's up about 0.06 today. And on the week, also pinning the needle for the week. So FX vol, maybe explaining why we're seeing not just the Mexican peso out there this week, but also Aussie or New Zealand dollar, and the Swiss franc USD, all making it into our movers and shakers this week. FX CVOL pinning the needle right now at 7.99. The low was 6.6. So that's a pretty impressive move for FX vol, given the fact that it usually doesn't move much at all. And at the bottom of our list this week, taking a bit of a respite, is the aggregate ag CVOL, 20.5 right now, off about 0.13. So the only vol loser today. But outside of that, it's actually pretty close to its high level for the week. The low was 20.25 last week. The high was 20.62. So we're kind of just off the highs right now at a 20.49. And looking at our movers and shakers right now, Carley broke it down for us. There's a ton of energy in our dark side, including nat gas, RBOB, heating oil, and WTI. So I think we have to head there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the wonderful world of energy we go. Remember, go to cmegroup.com/TWIFO to begin your journey with our reports. Once you're there, you'll get that asset class drop down. Go down 3 slots to energy, then go to the top of the product family. Usually Carley and I are on. We're going to talk nat gas. I was joking about it earlier. We'll get there in a second, but we haven't had a chance to talk crude oil with Carley in a while, and it does seem to be lighting it up these days and also capturing a lot of attention out there. Everyone's talking about crude. How low can it go? Right now, the answer is pretty much 73 even, off about 2.5 points, or a little over 3%, about 3.33% just this week. And in terms of paper, kind of delivering on the paper front this week as well. Almost exactly 600,000 contracts on the tape right now, 597,000 to be precise. So crude oil, if you've been listening to the show for a while, you know is usually around 400, 450 for the week. So nearly 600K is nothing to sneeze at, and nearly 40% of that is going up in the October contract. So we're going to hang out there. It has about 26 days to go. But Carley, I'm sure a lot of your clients have been calling you up with this same question. What's up with crude? How low can we go? So what's catching your eye out there in crude now that WTI is hanging out at around a 73?
Well, I mean, there's some pretty good technical support down in the low 70s. And to be honest, I wouldn't be shocked to see a bit of a flush out into the high 60s, maybe 68, 69. That's not out of the question. The reality is, though, we're in an environment that is extremely low volatility. I know if you're looking at like the weekly vol, it doesn't look that way. But if you take a step back and look at vol over the last, let's say, 5-10 years, you can see implied volatility in oil is very, very low. And one thing I know about oil, I don't know everything about oil and I can't see the future, but I do know that volatility goes in cycles. And when the market's too quiet, we're probably setting up for some sort of volatility event. We may not even know what the catalyst is yet. In fact, we probably don't. But the reality is at some point, eventually, probably sooner rather than later, we're going to get a really big vol event in oil. I'm leaning higher. I think as long as we hold the 70 area, at some point we'll finally get a move to the upside that the bulls have been waiting for all year. If I'm wrong, we could see, who knows? There's really, if we start breaking down into the mid 60s, honestly, there's nothing stopping it until we get much, much lower. Just a couple of examples of when we've seen vol this low, 2014, right before the fracking crash, 2020, right before the COVID crush. So, I mean, there could be some really interesting things. And one more thing to say, we know of a lot of programs out there and have a lot of people that we talk to that have been consistently selling options in oil because it's been working literally for the last 2 years. That has been the strategy that has worked the best, is selling options, not buying them. But I just want to put a warning out there. If you have made a lot of money selling oil options, take a step back, make sure you're at least hedged or maybe even just sitting on the sidelines, because it's going to get a lot harder from here.
So in your view, then, if we hit like 65, it's look out below, all bets are off.
Yeah, no, I'm leaning higher for now because of seasonality and because of some fundamental issues that we've got going on. But the reality is, if you look at a long-term chart, let me just pull up a monthly chart here real quick. Really, we don't want to see it below 70 if you're bullish, but crude oil is noisy and messy. So we could easily, I'd say if we crack below, let's say 68, then you really want to be careful. The only time we've seen, let me just take a step back here. So we're sitting on a trend line on a monthly chart that dates back to 2015. So we're talking almost 10 years, and it's held each and every time except for once, and that one time was 2020 during the COVID crash. So if it does break, and I don't think it will, but if it does, it's going to be really, really nasty. So be very careful with downside risk.
Noisy and messy, a good way to describe crude and most of the markets I think we're going to talk about today, Carley. They're all kind of noisy and messy, it seems like. All right, now let's see what kind of noise and mess we're seeing out here in WTI options this week. Now we're hanging out, we're threatening a 70 handle. Carley is talking about maybe if we do break lower, having the potential to break much lower. So you might be forgiven for expecting, 70 strike action to be leading the dance this week. But actually, no, listeners, it is the 110 call in December that is leading the dance this week with 21,238 going up. Now, all of that going up on Monday, though, and it looks like folks were bailing. So it does seem like someone deciding to get the heck out of Dodge on some, shall we say, extreme upside here in crude. So I take that one with a bit of a grain of salt, a bit of a closing print. But nonetheless, it is the big dog out here in WTI this week. If you want to get to some more relevant and probably expected paper, then let's go back to that October cycle that did nearly 40% of the paper this week. That's where the OX 70 puts are leading the dance, and that's pretty much exactly what I expected. If I was going to fire up the TWIFO reports today and someone said, guess what's leading the dance in WTI right now, I'd say undoubtedly it's 70 puts. Probably with about a month to go, and that is pretty much exactly what we're seeing. It just seems like all the fear and consternation is to the downside right now. 20,000 of these going up pretty much exactly this week. The big day was actually Tuesday. 7,000 almost exactly going up on Tuesday, followed by about 5,300 on Wednesday, opening both days. 4,100 today against an OI of about 24,000, and then 3,600 on Monday, slightly closing there. Now, Carley, you said you think there's more opportunity to the upside. What are your thoughts on maybe using almost a 1 month, about a 30-day put on the 70 strike as a bit of a hedge right now? You like that, or is that kind of wasted money to you?
Well, the nice thing, obviously, the volatility is low, so the options are cheap. So I don't think it's a bad idea. What we're leaning towards is basically just buying cheap volatility exposure. For example, you can buy March calls at like 90 strikes for $700-800, so you're not spending very much money. Risk is very low. It gives you 176 days in the market, and if volatility increases, you're there for it. I mean, obviously, if the market goes down, you're going to lose your $800, but I think we can all live with that. So it's a good risk reward on the call side. I don't think puts is a bad play either. So if you're using puts to hedge downside or speculate on the downside, that's fine too. In fact, you may even want to buy strangles, because I could be wrong. Maybe we don't go up. Maybe we just collapse and we get a repeat of 2020. I don't think that's going to happen, but anything could happen.
I got so excited with myself, I forgot to break down the vol and the skews. Let's do that right now. Let's go out to the October cycle. What is vol right now in October crude? About 27.25, up slightly on the week, up about 0.15. Decently frothy, obviously not as explosive as we've seen it in the past, but also a fair amount more than a lot of the other assets we're going to talk about on the show today. Skew-wise, last week the puts had all the juice, 5.4% bid. This week they are flat, and that makes some sense. If you were long puts this past week, you're probably trying to monetize some of those right now, so it makes sense that some of that skew be coming back down to earth. Last week the calls 2.4% cheap. This week about 3% bid, so swinging entirely in the other direction. Again, that makes some sense. We're trending lower, seeing the skew rotate a little bit, and also maybe some folks are thinking what Carley's thinking. Maybe there's a little bit more opportunity here to the upside, and they want to gobble some of that up. It's not aggressively bid, but it's a little bit of juice to the upside. And going out to December, where we're also seeing some action right now, that vol's at about a 29, up about a third of a point right now. Skew-wise, the puts last week, 5.8% bid. These are still fairly bid, about 4.3% bid. Obviously, longer time horizon for December, so makes sense they might hold their value a little more. Calls last week, 2.7% discount. This week, exactly flat. We never see this. 0.0. So they are completely even with the at-the money. So there is, outside of that one person bailing on those 110s, I guess there's not a lot of action to the upside in December, which makes sense because our next most active contract Number 3 this week are the DEES65 puts. Now, remember we said the put skew in December came in about 50%, but it still held its bid. It's about 2.6% premium right now. But it seemed like somebody was just bailing on all these 65 puts in December, which again makes some sense. We did see a sell-off if you're owning some puts in the December timeframe, even though they've moved not as much as obviously the October. You still need to monetize some of those. Some folks seem like they did just that this week, including about 7,000 going up on Wednesday, again, mostly closing. They were closing all week long. 5,800 on Tuesday, again closing. 4,300 today against an OI of 33,000. So there's still some size on the 65 puts. And about 1,900 on Monday, again closing. So folks were bailing on the 65 puts all week long in December. Probably why that skew got cut in half. And also makes some sense, again, if you got some puts, you do have to take them off. Maybe you save a couple for a rainy day in case that worst case scenario Carley was talking about comes to pass. But interesting stuff. Are you up to anything out here in crude oil? What are your thoughts? Can crude keep getting lower, or are we kind of nearing the bottom end of this range? I'm sure you're not hating it at the pump right now. That's a nice little plus for all of you folks out there. And since we're hanging out in energy, and since we are talking to Carley, I'd be remiss if I did not bring up what folks used to call the Widowmaker. Not so much these days, but who knows? Maybe you'll start getting to those frothy levels again where it takes people out. Of course, I'm talking about our old pal Nat Gas right now, listeners. Our number one dark side mover for the week out here this week, listeners, off a little over 6%, about 6.1% to the dark side. It was number one in the other direction last week, up 12%. So a volatile couple of weeks right now, hanging out as we're kicking off the show, almost exactly at the 2 handle, 205 to be precise. Off about 7 cents just this week, so a little over 3%. This week, obviously, go back to the end of our show last week, off about double that, a little over 6%. Carley, I know Nat Gas is your baby. When you're not talking to me, you're slinging all types, I should say, of crazy upside and ladders in Nat Gas. So what's catching your eye out there as we're hanging out at the 2 handle in Nat Gas right now?
Well, we're going into the September expiration, and to be honest, this is not what the bulls want to see. I think we're probably going to see Nat Gas retest. I've got like a speed line I've drawn on my chart, but more importantly, kind of just retest the lows from what we saw a few weeks ago. So I'm looking for like 190-ish on the September contract as we go into expiration, maybe even a little low. I wouldn't even rule out 180. So I think we go lower, but we'll be ready and willing to play the upside pretty aggressively from those levels because seasonality is bullish. And I think most of the selling is just simply contract expiration and position squaring and that sort of thing. And I think it'll work itself out and we'll probably find our way back higher, but lower first.
Interesting. So no 2.5s, no 3s in your back pocket right now. No funky ladders or bullish risk reversals. You're kind of going to let it drift lower a little bit first?
Well, right now, yeah. So we actually had suggested our clients do bull call spreads with naked legs a couple of weeks ago, and they worked out okay. I mean, our timing could have been better, but it could have been a lot worse. And we basically kind of looks like we're probably going to end up breaking even. As the market rallied, we bought back our puts. We bought back both the short options on kind of ebb and flow, and we're just sitting here holding. I think most of them have the October 275 calls. They're not worth much, probably aren't going to pay out for us, but it's a free trade at this point because we covered most of the premium in our option sells. So we do have a foot in the door on the upside, but I wouldn't have anything aggressive until we get quite a bit lower.
So you're saying bull call spreads with the naked legs. You're talking about your traditional ratio, like a 1/2. Is that what you're talking about?
Yeah. So let's say, for example, if Nat Gas does get down to our lower targets, what we'll look to do is buy a call spread. So we'll buy most likely with December, but we'll have to see what it looks like. Buy some sort of relatively moderately out of the money call option. And then instead of paying $2 or $3 grand for it, which is what the market expects you to do, we'll sell a call above that and then we'll sell a put below it. So we're basically selling a strangle and then buying a call option in the middle. So it becomes a free trade. Now it's free in regards to premium paid. But we are accepting unlimited risk under the short put strike price. So that's kind of the true cost is accepting risk.
I got you. A bullish risk reversal with a call kicker, if you will, out there. So yes.
Yeah, you can call it that. Yep. You got it.
I never heard anyone call it a bull call spread with a naked short, which again, that's why we do the shows. It's fun. Everyone has their own terminology. Hey, it's my birthday today, so I don't think you're pressing me on the age front, but we shall see. I haven't been to Buc-ee's yet, so you got that on me, that's for sure. I've yet to have a Beaver Nugget in my life. So my life clearly not complete yet, Carley.
It's not.
Let's keep rolling. Let's go out to nat gas land and see what's lighting it up out there today. And nat gas, moving decently, 6%. But, I mean, volume-wise, again, putting up the numbers, 603,000 contracts on the tape. So outpacing WTI and what could arguably be said much more mind share week for WTI than it is for nat gas this week. Seems like all the headlines are crude. But nat gas putting up the numbers, once again defying the notion that a $2 underlying, nobody cares about the options, because if that were the case, they would just shut down nat gas right now, and that is clearly not the case. The big dog of that 600K, 43%. Man, we're getting weekly now. SEP contract has about 5 days to go, a little less than that actually, so not quite a daily, but also not quite a weekly. A very near-dated action here in nat gas. That did 43% of the paper, that expiration cycle. What is the vol right there, you might be asking? 57, off about a 1.3 points. But again, talking vol, that near-dated, kind of a bit of a misnomer. Let's go a little bit farther out. Let's go out to October just to see what the vol is out there. That's got about a month to go, 34 days. That's a vol is at about a 62. Again, respectable for nat gas. We've obviously seen it get much higher, but also have seen it drift lower as well. So kind of hanging out right about where you'd expect maybe right now. In terms of skew on that near-dated stuff, last week the puts 1.5% discounted. This week, about 3% bid, so catching a little bit of a bid to the puts. The calls last week, 2% cheap. This week, 1.5% cheap, so not a lot going on the call front, maybe reflecting Carley's lack of enthusiasm for him as well. Looking here, if we go out to the a little bit longer term, let's go out to the October contract again. The skew out there, the puts are about 3% bid right now. The calls 2.7% cheap. So again, that interest as we're hanging out close to the 2 handle is again to the downside, which makes some sense. Also probably explains why the 2 puts with about 5 days to go are leading the dance this week with about 41, almost 42,000 contracts. The big day was actually yesterday, nearly 17,000 going up yesterday, slightly closing. So some folks slightly bailing on some 2 puts. Seemed like a lot of back and forth paper yesterday. Almost 11,000 today. My voice still not recovering from all the birthday celebrations, listeners. Nearly 11,000 going up today out there. Looks like against an OI of about 43,000. So still obviously a lot of paper open on that strike. And then 8,100 on Monday, 5,700 on Tuesday, opening both those days. So opening earlier in the week, closing looks like later in the week, slightly closing. So a lot of back and forth. Again, we are vacillating around the 2 handle. These are very near dated options, so it makes some sense. We'd see a lot of back and forth. If you're not done with the 2 puts, how about the 2 puts in October? They were coming in at number 2 this week, listeners, with about 26, almost 27,000 of the contracts out there. So a little bit more time. That's kind of more along the lines of what I expected. The near-dated stuff, though, kind of fascinating. The 2 puts right now in October. The big day was Tuesday, about 8,000, mostly opening there. 7,400 today against an OI of, get this, 66, almost 67,000. So there's a ton of OI on those 2 puts in October, which, again, makes some sense. 7,400 today against an OI, again, of nearly 67,000. 6,000 on Monday, opening there. 5,100 on Wednesday, slightly closing there. So again, back and forth on the 2 put strike. So not exactly surprising what we're seeing out here. Let's go really quickly to see if we see any other interesting and or aberrant prints. Again, most of that paper going up with about 5 days to go. So let's go hang out right there. How about number 3? We got the 230 calls, 2.3 calls with, again, about less than a week to go, going up about 22, almost 23,000 times. The big day was yesterday, 8,700, mostly opening there, 8,100 today. So a lot of action on the 230s. There's an OI of 10,000 on this strike, so could be closing today, but perhaps not. Looks like opening all week long, 3,500 on Tuesday, 2,200 on Monday. Carley, sounds like you wouldn't be down for a little bit of 230 call action with 5 days to go. That seems like it might be, dare I say it, an explosive move in nat gas. What do you think, Carley?
Yeah, I wouldn't make that bet. I mean, going into expiration, usually once the market picks a direction, let's say a handful of days before, it just sticks with it and the trend continues until we get through the event. And also we should always remember, even though $2 is relatively cheap for nat gas historically. Commodities in general go down more than they go up. So nothing wrong with having a downward bias even when it's a little cheap. But again, this isn't a time to be aggressive in either direction, to be honest. This is kind of a wait and see, in my opinion.
All right, Carley, we hit on a bunch of energy. What other complexes are on your radar this week? Where should we head next?
Stock indices.
All right, to the world of equities we go, listeners.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, pop out of that energy drop down. You're going to go down one slide. It's easy to find equity indexes. It is an alpha order list, after all. And then from there, you can pick your poison. There's an embarrassment of riches here. You can go, of course, Russell 2000 has been dominating a lot of the discussion of late. You can go NASDAQ. You can go E-mini. Carley, what equity indexes are catching your eye these days?
My focus is on the S&P 500.
Obviously, a lot of tumult out there today, but prior to today, we saw mostly green. You and I haven't really chatted since that big dust up a few weeks ago, the Black Monday redux, if you will. So maybe let's start there. What were you thinking as you saw this big quote unquote unwind trade with the yen going on over the weekend? Obviously, it was pointing to a pretty dismal open. We saw that on the open on Monday. We saw VIX cash spiraling to a ridiculous level, 65, somewhere in that range. And then it seems like ever since that moment, folks just came in and they just stepped on the gas, and we've been pretty much green almost every day since until today. Carley, what's been catching your eye out there in equities as all this has unfolded?
Well, I mean, you mentioned the yen carry trade and the big sell-off in the stock market followed by a big rebound, and all of these things, if you go back to 2008-ish, before and during the financial crisis, literally everything is playing out almost like we're in repeat mode. So I'm not saying we get a financial crisis. I'm saying we should continue to be very, very cautious. This morning we were recommending our clients put on some bearish option spreads in the S&P. Just so happens, so far it's a pretty good start to it. But we'll just say, it's one day. Who knows what tomorrow will bring? The interesting thing is, if you look at a daily chart of the S&P or the NASDAQ, today feels like a big down day because it's all at once, but it's really just a small little drop in the bucket. So this, in my opinion, this might only be the beginning of a much bigger pullback. Usually when the market, usually when you get a big spike in volatility like we saw, VIX got to 60. That's very, very rare. We've seen the biggest volatility crush literally ever. I think it's the biggest ever. It might be second biggest, but really this is very, very unusual price action. When you see things that are this out of bounds, to me, it's a red flag. Things don't feel healthy. This is not a healthy market. I think that we will, at minimum, go retest those lows that we saw a few weeks ago. If not, go a good amount lower, just simply because there's a lot of froth in the system. It feels like most market participants are drunk on complacency. Not only are they piling money into equities, but they're piling money into leveraged equity products like ETFs, triple leverage tech stocks. I mean, there's a lot of things that could go wrong. And so we're positioned for another sell-off. Only time will tell, but usually once volatility comes, it's hard to put that genie back in the bottle. I know it seems like we have, but I'm not convinced that we have.
Drunk on complacency. I like it. Tell us how you really feel, Carley. Stop mincing words. I wish you would just come out here and say it like it is. You're making a lot of interesting points there. That's been, certainly this market has been whistling past the graveyard for some time, with the exception of today. But you're right. I mean, we're talking, 500 handles in the S&P from that low, pretty close to it. And you're right. It is pretty much the most aggressive vol crush we've seen in modern market, memory. It's been crazy. So a lot of unprecedented things going on out there as I sort through and sift through this S&P report for this week, listeners. Again, breaking down the E-mini S&P sometimes is, again, just like trying to identify the individual droplets of rain within the hurricane. There's just so much going on, so much swirling around you at all times. 3.3 million contracts on the tape right now. So spoiler alert, we're not going to get to all of that, listeners. And even though things are wild and crazy out there right now, we still see a lot of the same old nonsense, the literal picking up of nickels, or in this case, even pennies in front of the steamroller. The top print right now, even this week with all the craziness going on, is still nearly 100,000 of the 46 half puts expiring tomorrow. 46 quarter puts expiring in a few minutes, 57,000 of those. 46 40 puts, 25,000 of those. If you're wondering, S&P hanging out right around pretty close to the 5,600 level right now, 5,580 or so, listeners. So yeah, those puts nowhere in the rearview mirror and nowhere in the windshield either, and yet they're lighting up the tape. So a lot of that kind of nonsense is still going on, which also does obscure some of the real meat out here. If we go a little bit farther out, I know all things 0 day are kind of where the action. And let's see, let's dive in. Let's go out for 1 day, listeners, and see beyond the nonsense, beyond the noise, what we can find. 56 half calls going up about 14,000 times this week. Again, that makes some sense. Also makes some sense the way they were playing out. Opening earlier in the week, closing yesterday, and about 5,600 today. That is actually opening paper. Only 2,400 are open coming into today. So some folks were opening on the 56 halves today. We were kind of in rally ho mode earlier this morning. So maybe these folks got caught up in it, and maybe they got the heck out of Dodge now, which is why we're seeing roughly 2x the OI going up today. Or it could be some folks overriding them. Either way, a lot of action on these roughly actually 70 handle out of the money calls right now with about a day to go. And then 55 half puts. So that's a more relevant strike, dare I say it. Folks have been piling into those, it seems like, all week. Again, about 18,000 of those going up this week. The big day is actually today, which, again, go figure. Today's the day for puts. 7,600 have gone up so far today against an OI of a little bit shy of 4,000. So clearly opening paper there. And then 4,000 yesterday, also opening. 3,400 on Monday. 2,700 on Tuesday. So interesting. A lot of downside puts now, much closer, opening all week long. You like those, listeners, 55 half puts? Or are you a more roll the bones type and take your chances with the 56 half calls with a day to go? That's not looking that great right now, listeners. Then we get more 4600s puts, all that kind of nonsense. Again, there is an embarrassment of nonsense out here to be found as well. We got a week. We also saw 5,000 and a quarter puts going out. These go out in about 7 days, 2,100 times this week. So there is all kinds of craziness afoot out here, listeners. If you like maybe a little bit longer term, dare I say it, a month, let's try that, listeners. Let's go out a little bit longer term and see what we can find. How about the 5,400 puts in September? These go away in about 29 days. The vol in September, you know the deal. 1,370, up about 1.5 points today. Skew-wise, we were just talking not too long ago about how these puts aren't really that bid and the calls were decent out there. We were talking about how cheap it was not too long ago, right before the big meltdown, to actually buy protection in a lot of these indices. Those days are gone. These puts are 16.5% bid now. So again, you're starting from a lower vol baseline. At the money, vol is low. So the net outlay is still going to be lower. But in terms of skew, we're starting to see that get bid up a little bit again. The calls, 12.4% cheap. So again, we always say if you want to put on this protection, maybe do it before the horse leaves the barn, before we have the massive Black Monday redux out there. Yeah, 5,400 puts going up nearly 20,000 times today. These will go out in about 30 days. Big day was Tuesday, 9,500 on Tuesday, mostly opening there. 4,500 on Monday, slightly closing there. 3,300 today against an OI of, get this, 31,000, so still some size on these. And about 2,000 on Wednesday, also opening. So again, we're kind of all over the place on these prints, which again, you would expect, listeners. It is the S&P. If you go out a little bit farther, we're seeing 52 half puts in October, 30,000 of those. 5,500 puts going out in 60 days, 2,500 of those. And then we have, 5,000. So the par puts, about 100 days to go, 10,000 of those. And let us not forget the upside. 6,000 calls in DEES went up 7,600 times this week. So again, it's the S&P. If you want it, you can find it out here. And it's certainly an embarrassment of riches. Any of these strikes resonate to you? You said you had some bearish put spreads on, which is a good day to have them on, Carley. But it sounds like in all, you're not exactly loving this market right now.
No, not at all. I mean, that market can go up. It's we're in such a unique time frame. There's a lot of things driving the market that can't be predicted or quantified. I mean, there's still so much stimulus and lower for longer interest rate money sloshing around. With all that said, what we did this morning, and some of our clients are doing it as a spec trade, but others are doing it as a portfolio hedge. So if you need to hedge your portfolio, you can do something like this. I'm not making a recommendation, this is just an example of something you could do. Using the December options, they have about, 120 days to expiration. So it gives you lots of time in the market. You can do something similar to selling a 6,100 call and using the proceeds to buy a 5,300, 5,000 put spread. I mean, obviously this is, again, not a recommendation. But the idea is you buy a put spread using the market's money. And if you're using it to hedge your portfolio can go up to 6,100 without you really having any consequences other than your futures account's giving back a little bit of money while your equity account is making it, and you basically cap your profit potential is capped above 6,100, but it gives you protection from 5,300 to 5,000, which is only a 300-point spread, but that's $15,000 per contract. So it's not a bad play for free using the market's money. Margins like $8,000 on something like that. We'll see. Only time will tell. But if this is anything like 2008, and again, I don't think the magnitude will be like that, but the price patterns are. And if it is, we should be getting pretty frothy and rolling over here in the next week or two.
Interesting stuff, listeners. As we roll on into one more complex, Carley, what else is on your radar this week?
I've got my eye on the grains.
All right, to the ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the top of our alpha order list we go, and then into grains and oil seeds in the product family. Then from there, again, it's an embarrassment of riches. We can go corn, Chicago wheat, soybean meal, oil, or the beans themselves. All sorts of fun. Carley, which of the ags are you focusing on this week?
Corn, soybeans, you take your pick.
All right, listeners, we have a dealer's choice. Since it's my birthday, I'm going to go corn. We haven't talked corn all that often. It is typically the big dog of the ags complex. Yet for whatever reason, when we get into ags, we talk Chicago wheat, we talk the beans a lot, even sometimes esoteric things like the livestock or maybe a little bit of dairy even. But for whatever reason, we don't get into corn that much. Corn this week putting up some numbers, not quite as robust as we might normally expect. Again, it is the dog days of summer. Something has to be light from a volume perspective. I guess it's corn this week, 270,000 contracts on the tape. We might expect maybe closer to 400,000 on a given week. But again, seasonality comes for us all, listeners. In terms of where is corn hanging out right now, 370 and 3/4, up about a quarter this week. So kind of a quiet week this week here on the corn front. Carley, what's catching your eye out there in what is typically the big dog of the ags complex?
Well, so corn has been very, very slowly dribbling lower. Our original target has always been, well, not always, but for the last couple of months has been 330. We're not quite there yet, and it's very possible we do see 330 in corn as we go into harvest. But seasonality is starting to firm up. Normally, we don't get a real bottom until October, but this has been kind of an unusual year, so I wouldn't be surprised to see the market bottom out a little bit earlier, just simply because it's been one of those pain trades, and I think the market's worked out most of the pain. That said, the reason it's on my radar is the options are wildly cheap, like crazy cheap. You can buy March call options they're so cheap they almost seem free. I mean, you can buy a March call 20, 30 cents out of the money for 10 to 15 cents. So we're talking a total risk of 500 to 750, depending on which strike you choose. That's 183 days in the market, and you're only 20, 30 cents out. I don't know if I've ever seen them quite that cheap, especially when we're coming off a couple of years of chaos.
So you're saying there's a fire sale in corn options right now. Get while the getting is good. Interesting.
There is, yeah. And it either pays off pretty nicely, or if it doesn't, again, hopefully that doesn't ruin your life to so the risk is very low, very limited. I think it's worth a shot, but we'll see.
Let's see if folks are taking her up on that, listeners. Like we said, one of the other things I like about ags, it's kind of refreshing, Carley, in this era where everything has to expire tomorrow or today even. to talk about the ags and things going out in like 90 days. That seems so old school to me now. And yet it's kind of fun and refreshing because we're going to do that right now. And corn, the big dog right now, listeners, is the Dees contract with about exactly 30% of the paper right now. That has 92 days to go. The Dees contract at a 393, listeners. So about 23 points above where that front month is going out right now. Vol there, man, Vol substantially less than the near-dated contract. The near-dated contracts are hanging out at about a 30 vol and going out to December. Again, getting to what Carley was just saying. Fire sale, Dees vol 19.5. She was talking about March 18. Oh, you are correct. Maybe you're onto something here, Carley, with this fire sale in corn vol. You don't see the ags, particularly corn. You're right, getting this low. Interesting. I might have to. Now you're talking me into some corn options here, Carley. This is when I get myself for my birthday, a little bit of some corn upside. In terms of action, listeners, well, before we get there, let's get to the skew. The skew in Dees, kind of flat. Last week, the puts were 1% discount. This week, 3.6% cheap. Last week, the calls were slightly bid, 2.9% bid. This week, coming in a little bit, about 1% bid out there. And in terms of action, it was the 400, the par calls leading the dance with about 14,000 contracts this week. The big day was yesterday, 5,000 pretty much exactly. 4,400 on Monday, 2,700 on Tuesday, 2,000 today against an OI of 19,000. Looks like opening all week long. And if they're taking Carley's advice, they're taking advantage of this this discount here, 19.5 ball. Maybe you want to put some away for a rainy day out here. Listen, it looks like some folks were probably picking up some 400s out here. Then if we go back to the near-dated stuff, again, I was just saying how refreshing it is to talk about longer-term paper. But if we go back to the stuff expiring in one day, listeners, yes, corn has that too. It plays in all the tenors out there. It was the 370 puts coming in at number 2, doing about 10,500 contracts this week. Almost all of that today. 7,000 going up today. So these are effectively the at-the-money put. We're at 370 and 3/4 in that contract with about a day to go. So kind of playing Russian roulette at this point. 7,000 today against an OI of 9,300. So maybe some folks bailing on these things, or maybe they're loading up for beer, swinging for the fences for tomorrow's expiration. The rest of the week kind of light, 1,700 on Monday and 1,100 on Wednesday. All the action on these 370 puts coming today. Is that you, listeners? Are you rolling the dice with one day to go on effectively at the money puts here in corn? These are nowhere near as cheap as what Carley was just talking about. These have an effective vol of about a 31, so you're paying a little bit of juice for these comparatively. But there we go, listeners. A lot of action in corn. Maybe if you're looking for a little bit of a nibble, maybe a little bit of corn upside is your huckleberry. But speaking of you folks, listeners, before we get out of here, let's get to a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, listeners, let's see what you folks have on the brain. Let's start with our actual question of the week right now. A timely one, if it does seem like the writing is on the wall for this one, though. We asked you at the beginning of the week. It's convention time in Chicago. A lot of us living in Chi-Town, we're a little bit concerned. They turned the city into pretty much a walled and armed fortress for the entirety of the week, so they were not messing around. Luckily, none of the anticipated shenanigans, shall we say, came to pass, at least so far. One day to go. But we asked you at the beginning of the week, do you expect this convention to have any material impact on vol or the markets this week? Is it going to move SPX and VIX, or is it just a dog and pony show? And Right now, you folks have pretty much spoken, and it does seem to be the answer. 80.5% of you right now saying it's just a dog and pony show. Actually, just ticked 81% right now saying it's just a dog and pony show. So Carley getting her vote in there as well. And yes, it will move the markets coming in at 19%. Well, the clock's ticking for you folks, unless you want to try to ascribe today's market move to the DNC, which I don't think you can. Let's keep rolling out here. Let's get to some of your feedback. Let's go out to, I love this handle, Theta Noob. He's written in before. He was talking to some folks on Twitter, and he mentioned us on it. He just said, the folks at Options have a good segment on futures options. Well, thank you. Just make sure you understand the nuanced differences between futures and equities, the expiration point value, etc. The only two groups I still listen to and learn from are Options Insider and the Tasty folks. So there you go. Thank you for that, Theta Noob. You've written in before, I think on our boot camp show. Good to see you're also enjoying a little bit of TWIFO fun out there as well. And let's get out of here on a comment from our live here, Carley. It seems like you poked the bear in our live, Carley. And they're nice folks. I know they're not angry. But one of our pro members here, Age of Del Aquarius, says, wow, it takes two to make a market. I am quite bullish on U.S. equity markets here. So he's taken everything you're selling in the S&P right now and saying, give it to me, Carley. So
Sure.
What do you think? Point counterpoint here to end the show.
He's exactly right. That's what make markets. Everybody has different opinions. I tend to be a contrarian, and to be honest, most people are siding with his opinion, and maybe they are right. But it's been my experience that when most people are thinking the same thing, the market does the exact opposite.
That's why you and I get along so well, Carley. We're both cynics at heart, and we both love a little bit of Buc-ee's, even though I've never been there yet. So I'm dying to get there, Carley. Maybe after the show, I'll hop in the car and go, 6 hours to the nearest? I think it's worth it. That's a good birthday present.
It is.
Some Beaver Nuggets. Are the Beaver Nuggets all they're chalked up to be, Carley?
Sadly, I did not try the Beaver Nuggets. Nobody mentioned them to me until after I had left, so I'll have to go back.
Good jerky. I heard the bathroom's something to write home about as well, so all sorts of fun to be had. It's just a good time. Beaver Nuggets, bathrooms, what more do you need? Well, Carley, in between your forays to Buc-ee's, if folks want to reach out to you and see what you have cooking, maybe discuss their views on the S&P or on nat gas or any of these other products, where should they go? What should they do?
Sure. So if you want to learn more about us and our services, you can visit us at DeCarleyTrading.com. It's DECARLEY trading.com. You can also follow us on social media. On Twitter, I'm at Carley Garner.
She's a good follow on the old Twitter. You can follow along with her next trip to Buc-ee's, listeners, at Carley Garner. On Twitter/X. And you know where to go, listeners, to find these reports we're talking about here every week. CMEGroup.com/TWIFO. They're so nice to keep them running for you all week long. You can check corn at 2 a.m. on a Saturday if you want. No one's going to judge you. It's just you and the report having fun. Get on over there. CMEGroup.com/TWIFO is the place to go to kick the tires and light the fires. That's going to do it for us. I got to rest my voice. It is my birthday after all. I'll have to do some singing later. All kinds of fun. So we'll stay tuned for that. Maybe I'll hit some Beaver Nuggets. We'll see. But you know what? No rest for the wicked. I'll be back again tomorrow, noon Central, 1 p.m. Eastern, for a little bit of volatility viewing with my buddy, Mr. Russell Rhodes. Who else will join us on the show? Who knows? You got to tune in every week to find out. And then back one final time, because the producers hate me and because I love you folks. Exclusively for the pro folks, we'll be back for a little bit of options oddities action. Should be another wild one post Jackson Hole tomorrow. Should be an intriguing one. If you want to check that out for yourselves, you want to join the awesome crew that is hanging out in our pro throughout the week, the optionsinsider.com/pro is the place to go to kick the tires and light the fires out there. And then we're back again next week. Another great episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/ Options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.